I want it. Gotta make to myself a promise.
Okay, good day everyone. Thought I'd do this quick update. I'm Rangadad. This isn't financial advice. It's just the way I'm looking at the markets, etc., etc. Obviously, massive flash crash last night. Just want to provide this bit of an update. A lot of the stuff we talked about in the 1st of October video I did, but there's some stuff going on at the moment which I can kind of show you, which gives a good idea of how order flow can kind of affect price action, and how actually in the Discord I was a couple of minutes late before the crash last night, but I actually saw it just about to happen on the futures market, and I'll show you why that was the case, so you can look out for it in the future. First of all, I'll just cover this quickly. Like we talked about it the other day in the video, you know, we were getting some pretty big orders at these tops in the dark pool activity. If you had been watching this on the lead up, you'd also see that there was a fair bit of action at the highs again. Now we have had a decent trade here. It could be a sell. It could be a forced sell even as part of that. What was going on there? Hard to say. I mean, that's Coinbase. Metals and mining had an interesting dark pool trade there as well. Hard to tell if that's a sell or a buy there, but it may actually be a buy. This one here is another interesting one. So IBIT, again, it looks like these guys got rid of their positions just before the crash. I'd be surprised if they were buyers at that point, but you never know. Could have been. Fairly big trades regardless. So did we hit the, oh yeah, we well and truly hit $70. So we were calling $70 as being potential positive gamma, or at least a call wall, which would have likely affected Bitcoin. That seems to have been pretty much the case. It did eke higher than that, but you get that at highs as well. They actually break a little bit higher than you think, and then they pull back. So this is interesting to me. The amount of volume that came through staples, consumer staples on Friday, was just way higher than what we normally see. I have a funny feeling staples is going to go nuts in the next week. XLP again, sorry. XLK, interesting. So nothing huge in the last month at the highs, which does surprise me a little bit. Tech sector. I doubt that that's a sell. I have a feeling these guys are buying the dip. And so what you're probably looking at, you're looking at a liquidation flush. You're looking at a leverage flush. So this move down got so much leverage out of the system, particularly crypto. It's insane. We just knocked out the leverage since, every bit of leverage basically, since June 23. And that's a lot of leverage. People were going big time long. But what I'll do, I want to have a look at this because this is interesting to me. Go 90 days. So technology sector is kind of the one you want to bounce. If you see a decent bounce in that, look at this. These guys aren't doing massive trades. Interesting. So they're still holding. This to me looks like a buy the dip. And a couple of the flushes we've had have pretty much gone straight back to key levels, key moving averages, and then moved up from there. And it was, this whole move was based on Trump tweeting on Truth Social, whatever you want to call it, on spitting truths or whatever it is on Truth Social, whatever bullshit he wants to call it. So it's not on anything really substantial. There's no, yes, they came out, the final flush was Trump came out and said he's putting another 100% tariff on China or whatever. and then it dropped. And the market should know by now that shit like that gets resolved with Trump reasonably quickly. It might not. This could have been sort of the top on these markets, but just be careful that it looks like there's people buying the dips here. Looks like that was people trying to get out. Typically the diamond is a sweep, so they want to get out pretty quickly. And we didn't get much after that. So dark pools can tell you a lot about where the big guys are positioning themselves. And this is another interesting. So financial sector did have a big flush. It was sort of starting to head down already. I think we pointed that out in the October 1st one, which it did actually get a pretty decent dark pool trade after that. But this looks like a buy the dip. These guys typically, if you see a trade this large at the bottom of a move, it's a buy the dip trade. Okay, so this might be a fairly short-lived dip. So just covering off on that, that's kind of what I think is potentially coming up. I actually think that there's a chance we come down more into this wick and we hit the daily 800 EMA, which is around 107,950 again. But there's a couple of things happening in the short term, which I'll just cover off first as well. So this here, what I'm seeing at the moment is this massive trade here, or it might not be one trade, but it's an order block. And it's been in for a while. Price came down, smacked it, and it stayed there for for about half an hour or more, trying to soak it up. And this is on Binance. So the market maker couldn't fill the whole order. They've had to move price away. The market maker's gathering a bit of momentum to come back down and hit this again. And I have a funny feeling that one of two things is going to happen here. One, they're going to come down, they're going to fill this order, and then they're going to move back to the upside. You can see here they've already placed, there's already some larger orders being placed at the top of this. These guys aren't buying here expecting it to go down further, right? They're buying here on the expectation the price is going to go up from there. There really isn't, like compared to this is the size of the orders that we were seeing last time we actually bottomed. When it was starting to fill here, it was actually, a bit over 2,000 BTC. That takes a lot to fill when you've lost all your liquidity in the marketplace because of that drop, right? So what I'm seeing at the moment, and I'm seeing within these candles here, there's a lot of these orders that are coming in and going away again, and they're quite big. Like this one here, 695. That could be a different player. It could be someone trying to draw price towards that level. They know that price moves towards the big trades, right? Market maker wants to go towards big trades, typically, but sometimes they're a bit too big to actually fill. So this could be what we call what would you call it? It's not even a put wall. It's just an order block. It's a big order level, big liquidity level that it should hit and bounce up, should bounce to the upside. You see that order's disappeared now. Doesn't look like it was filled. But yeah, just very interesting seeing these orders come through. Now, you'll notice here I got the footprints on as well. That's not necessarily for this case, except back here. Back here, have a go at this footprint on this candle here. This is the one where that big order started to look like it was going to be filled. Price moved down, fairly standard volume on the way down, and then all of a sudden you've got this massive spike in volume down the bottom here. Now that's been registered as a sell volume, but it's because the market maker is actually taking that order in there. So just know that that's typically not really a sell. That's actually this big order being filled as a buy. Okay. typically anyway. So, you know, that's kind of what I'm seeing at the moment. Yeah, there's another one just popped into the charts, 200. That's 200 is not massive, but it just wiped straight through that. So we'll see how it reacts down the bottom here. And if it breaks through that and actually looks like it's going to keep flushing, then it's actually a pretty good short. But I'd be surprised if that is actually the case. Now, the other reason I wanted to show this particular chart was up here. So this is just one of the things I was looking at. When we were spiking last night before the drop, I actually posted in Discord, just be careful with longs. I think this is a short squeeze. There was liquidity up here. If we looked at the heat map, there was plenty of liquidity up there, right? But there wasn't a lot of large orders. So the actual, the order, what do I call it? Hang on. Whatever it is. It's the liquidity heat map. Yeah, the order book, sorry. So the order book here on the right-hand side had hardly anything above. Okay, so there's no large orders coming in. And we took that liquidity and then basically started to move down. And typically what I'm looking for on the footprint is I want to see a decent imbalance and then price move away. This one here, there was a lot of buyers, and you got to be careful because sometimes that, like a lot of buyers can actually be a signal that you are going to continue to the upside. In this case, because I was looking at it as a short squeeze, a liquidation sweep, those buyers are probably people getting liquidated rather than people just buying in to actually push price higher. So, you know, when I saw that, I actually saw it on the NASDAQ as well. I'll show you that in a second as well. And when I saw it on both, I thought, "Whoa, this is looking interesting." And then the NASDAQ actually flushed pretty quickly after that, had a big red candle. And just given everything that was going on and the fact that we had this bear flag, you know, I was leaning quite bearish at that stage. So just something to keep in mind when you're looking at the charts is it's all about orders. It's the market maker wants to go where he can fill orders because that's how they make their money. They don't make money on holding Bitcoin or anything like that. They make money on the delta, on the price differential between buyers and sellers. So again, here we've actually got this guy's kind of snaked it a little bit. We haven't actually come back down into that one yet. So that might still fill. Looks like the market maker still is a little bit scared of it, actually. They probably still don't have the actual volume to be able to sell to these guys yet. So they'll buy some more volume, bring it back down, and eventually that will probably fill. Don't know if it'll fill soon or not. Sometimes you see this happen. So again, they've seen price move away and they've put in a decent sized order. This order's been bumped up now to 1.5K. They're typically, what I think's happening here is these guys are kind of spoofing price to try and bring it back down and just so that they can get filled. But the market maker doesn't look like he's having any of it at this stage. The market maker is probably just struggling to get the volume required to actually fill these orders. So there's some big players looking to buy this dip. Volume leaders stuff, the dark pool activity seems to suggest the same. So we may get a decent run up over the weekend. All right, so obviously the liquidation heat map to, if you look at, like I was only really looking at the last 3 months. And I think I talked about this the other day, but there was a massive imbalance in terms of liquidations and liquidation levels between long liquidations and short liquidations. We just weren't seeing that many shorts come into the charts, both large orders or short liquidations. So we were kind of quite bearish in there. And I mentioned that in Discord. But okay, so the main reasons I was looking at the NASDAQ potentially peaking yesterday. One, it was a Friday. You always got to be suspicious on a Friday when there's been no real economic news, everything's just a little bit quiet and things are grinding up. It's just a little bit sus when you're at all-time highs and the market looks shaky, right? So you've got to be a bit wary on Fridays because that's when they like to drop things because it gives the market time to settle over the weekend. Now, obviously, stochastic momentum was already starting to go to the downside on the daily. We have global liquidity was definitely on the way down as well. Show that on a better chart. Let's just go there. Actually, before I go to that, let's go to SPX. We'll just go advanced decline line. So we also made a lower high on the advanced decline line. This is a little bit tricky to read, but lower high on that. It's not a great sign. It's not necessarily the worst sign, but it's not a great sign. Okay. So it's just one factor that sort of came into it. Sailor shift ratio is interesting. It's now signaling a buy as well. The buy signals are typically better than sell signals. Now, we were very close to this upper trend line here as well. And this trend line's a region. They're always regions. Don't necessarily think you actually have to hit them. We moved straight down into the daily 50 EMA, which is going to be close to the monthly. Oh, no, it's not even close to the monthly. Sorry, the weekly is what I was thinking. It's going to be close to the weekly 13. It may actually just pull back a little bit more on Monday into this, or even in the after hours session on Sunday, just to tag this 13 EMA and then move higher. At the very least, I would kind of expect some relief rallies over the next week. But yeah, look, consumer sentiment definitely wasn't the driver there. Yeah, it was definitely. Shit. Trump's just on a rampage at the moment. And the weird thing is there's some weird shit going on in the solar system at the moment. We're getting hit by solar storms left, right, and center. And there's some alignment between the moon, the sun, and these solar storms all in the same freaking couple of days. So it was a full moon the other day as we talked about, I think. I don't know if I said that in the Discord or on video, but anyway, the moon cycle is a pretty powerful one, actually, strangely enough. So, NASDAQ, let's have a quick look. Okay, the other reason, when we swept to the upside, we basically hit the 1 hour 2 standard deviation 25 period Bollinger Band. And then as soon as we failed back below that 200 EMA on volume, it was a pretty good signal that things were coming down. But if I just go up to futures. So when I was looking at this, futures was spiking, okay? Same thing as Bitcoin, was hitting the top of these Bollingers. And we're reasonably high on the cyclic RSI and distance from volume weighted average prices and stuff like that. It wasn't the main thing. That was just a signal to me to be very careful of this little pump. What was the main signal to me was RSP was actually breaking the previous low. Sorry, let's go to the other chart. That'll be easier to see. So RSP, let's get back to the daily. So RSP, I think I was looking at it on the 1 hour charts. Yeah, basically it was moving down pretty early. And it had already kind of broken this previous low here. It was just moving up and retesting that. And as soon as it started moving away, it was a good sign things were coming down. So the equal weights, both RSP and NASDAQ, were starting to pull back. They were showing signs pretty early that there were some issues. Vector candle recovery there too on the NASDAQ equal weight. And what else was it? So XLY, XLP was actually breaking a key level as well. So XLY, XLP was actually moving down when the futures market was actually going up a little bit. And then there was also the equal weights. I think they were breaking a key level as well. Yeah, so the equal weights here were actually breaking below this little base that they were putting on, which is this key level here as well. So breaking below this vector candle. When you got so many things that are actually sort of breaking key levels, it's a bit of a signal. And then, that was the other thing. So consumer discretionary versus SPY was actually starting to break up. It was a sweep of that. And yeah, it was starting to move up pretty quickly and coming off a low base, and basically essentially it was going to be a W formation, but we never really got the W in it. So that's kind of like, we could pull all the way back into here before moving up again. We could just come straight back down. This could just be a blip. But when the market's moving like this so quickly on just the president just tweeting, you've got to start being really careful that we might have hit the top, especially coming off that SPY and the NASDAQ trend line, overhead trend line. So Staples is based pretty well. Still didn't really move too much, but the fact that it didn't go up doesn't really worry me. The fact that it went up against the SPY was pretty important there. And discretionary's been coming down for a while. We've said that. The fact that this was coming down so much and we hadn't actually had a correction yet was a bit of a red flag. The other thing too, yeah, DJT gold wasn't really an advanced signal, but the fact that this had been moving down for so long wasn't a great sign. And the markets had been still going up. So we've broken below there as well. It'll be interesting next week to actually see if we make a bit of recovery on this. If this keeps going down, then there's probably more to come on markets. If we break below, retest and move away, then I would say that the top is in for now. And you just got to be very careful with any longs. DJI gold's a little bit better. It hasn't broken that key level yet, but again, it was a pretty good signal that there was trouble on the horizon. Let's have a look, see what, whoa, yeah, okay. So the 1 day VIX had a good move. And again, I mentioned this the other day that, the 1 day VIX and the VIX in general were just starting they were just starting to put in higher lows on the daily. And generally when it's creeping up like that, it's getting ready for something. And this was the normal VIX. It was just starting to creep up. And let's see what we actually hit. We haven't really hit what I would call a key level yet. This was another news one, I think, from memory, on the previous drop. So this might be it for now. If it's just a news thing, if Trump pulls his head in or things get resolved over the weekend, then you'll probably actually see quite a bit of dip buying and move back up towards all-time highs. I don't know whether it'll get new all-time highs, but probably at least towards the new all-time highs. Yeah, so skew's still pointed down, coming close to an interesting level where it has been bought up previously, but skew's been another canary in the coal mine in that on new all-time highs, skew never made it to new all-time highs. So that to me, and I've mentioned this before, was another red flag that we are getting close to topping in this market. If not like that, that's potentially a sign that we have topped. The other thing too was TLT was on the move. So again, last night in the pre-market, TLT was actually moving up and quite substantially. So with that heading up, with other key metrics suggesting that we should be going down and price spiking into that level as a liquidity sweep, that was a perfect setup for a short. And obviously it just flushed everyone. Just so many liquidations, it's not funny. High yield junk, I mentioned in the Discord the other day that high yield junk had moved down considerably and had broken some of these key levels here. And that was a bit of a red flag. Obviously it did that sort of, this was sort of what I was looking at as a major break. It did that 2 days ago, 3 days ago, whatever. Again, that was an early indicator, but it's been a hard thing to read. Like it's more that so many things were coming together at the same time was the main thing, not necessarily just that this was heading down, because as you can see, this has headed down a couple of times previously and we haven't actually had a drop on the markets. So you've got to be a little bit careful with these forward indicators, but yeah. Same thing again, like LQD-IEF ratio was actually stayed a little bit higher than high yield junk bonds did. But again, it was sort of definitely postured to the downside while the markets were still trying to go up, except it did have a pump when markets pumped as well. So that was a little bit of a false signal there. But again, it was just a retest of this sort of breakdown level. It wasn't really there was no confirmation above that. So you don't necessarily have to watch all these things to know when a market crash is going to happen or anything. It's just, if you're looking at them in advance, you can kind of get prepared for something to happen. Copper, I think I mentioned the other day that we had hit this level here, and that is a 50% vector candle recovery. Now, again, we're leaving vector candles behind. You don't have to fill vector candles in a bear market. That'll happen on the way back up. So don't necessarily think you have to come back up into these, but normally a 50% retracement on a big flush day is something that will happen. So it's just being mindful. Now's not really a time to go short, I wouldn't think. It's just time to be really careful and maybe do some dollar cost averaging in. Gold had a bit of an up day, but it's more just people rushing out of stocks and stuff. There's going to be some serious profit taking happening around here by the big guys that were pushing this up or holding all the way up. You don't want to be buying gold here. Retrace of gold back into probably 36.70 to maybe 36.28, somewhere around there. I'm just going to put a box around that. If this is just a bit of a flush and it pumps again, then then gold's probably not a bad buy up around this level. I doubt it will come all the way back into here, but certainly that's not a bad level. I'm going to be looking at how we get structure around that area. And you're probably going to be hitting the 200 EMA around there as well by the time it comes down that far. Gold may still go up, but at this stage, it's so overextended. I'm expecting a bit of a pullback. I mentioned in the Discord the other day that I did sell my silver and gold just below 4,000 on gold. So silver versus gold is still going up. So silver's holding better than gold at the moment, which is interesting. Silver could still run. It did do a pretty, two big wicks to the upside is generally a negative sign. Big volumes too. Generally, when you're getting big volumes and you got wicks like this, that's people selling, big guys selling into everyone else. So be careful of that. Oil is struggling. Yeah, not breaking key levels yet, I wouldn't think, but needs to bounce around 58 or 59. Okay, Dixie was the other thing. So Dixie had been sort of moving up and stocks hadn't really come back. Neither had Bitcoin really. Well, Bitcoin did a little bit, but stocks hadn't. So when Dixie's moving up like that, generally stocks are going to struggle to go up. So when they just kept charging, I was a little surprised there. But the dollar's come down as well. And the dollar moving down is probably because it was tariff-related news that caused this. Let's just have a look at the 2 year. Yeah, so the yields have come down. Treasuries have gone up, of course, which is a little surprising. Generally, when treasuries go up, the dollar actually goes up as well. But this was such a bizarre event. Really hard to know exactly the forces at play. The Japanese yen had a strong day though against the US dollar, and the euro I think had a pretty good day as well. Yeah. So at this stage, the pullback in the dollar might just be a little vector candle recovery. Yeah. Bit of a bounce on the euro there, but see the euro is struggling as well. The German bond auction the other day had hardly any bid to cover. Like, I think the bid to cover ratio was like it's almost like 1.0. Something stupid like that. I should have looked it up, sorry. But look at the news from last week, like the economic news, using an economic calendar, and look up the German bond auctions. Their bid to cover was lower than the last one, and it was almost like they couldn't sell the bonds at all. That's quite a bad sign for the economy in general. So global liquidity. I thought I saved this. Actually divide that by 1,000. Sorry. Trillion. I hate having that. Just gives me a better scale. Gets rid of the lines, but you know, this here was a decent pullback area just based on trend lines. There's a pretty good trend line coming down through here. Oops, that's not so good, but take it off. Anyway, interesting trend line there. Again, new all-time highs. We made a lower low on global liquidity. That to me is not a great signal. Typically when we get that, it precedes a bigger flush in the market. So I'm actually thinking we may have topped at this stage. Price action is the thing to look at, but you know, it doesn't look great. This is the other thing. So Percentage of stocks above the 50-day moving average. That was the other thing that was actually breaking down yesterday. So Thursday US time. The fact that we closed below this level in here, this wick level, was a little bit of a red flag for me. It did, I believe it did actually go up with the price action. So it wasn't an early indicator on the actual trading session, but certainly from the previous day, it was trending down. And now, are we done yet? You wouldn't normally say we're done at this point, but at the same time, this could be a general, if we just did a copy of that, we may start to find a base around here. Not that I would expect it to really follow a channel sort of rule. In fact, you probably wouldn't. Yeah. Let's just say that it's probably going down to, oops, yeah, we'll turn that off. This isn't a great measure. Yeah, potentially down around 24, which has had some similar sort of support in the past. So, I mean, the amount of issues that we've had with tariffs and Trump and China and stuff like that, this could drag out a little bit longer because it is second time around or third time around, whoever's keeping count now. So, yeah. October does typically have a pullback as well in markets. But are we done here, or do we come back down into this area, this previous all-time high level? Like, we are going to get bounces. It's just a matter of where. Like that, there's a pretty good level. There is a gap close just here as well, just in there. So I'd kind of, I suspect the Mag 7 should come back into the 200 moving average, daily 200. That's going to be a key target for me. Bounce from there, yeah, no problem with that. Do we bounce here? Huge potential. That is a pretty good level for a bounce, really. Volume on this level wasn't huge though, whereas volume sort of around this level was, or it was higher anyway. So just be a little careful with expecting a bounce here. Again, some fuckery early in the week wouldn't surprise me. Back up, vector candle recovery, back up into these lows here. Wouldn't surprise me in the slightest, particularly if it's in the pre-market on Sunday, US time. So Monday, Aussie time. A move back up into here and then a failure and then another pullback. That I could see happening over the next week or so. But I think that's going to be a key level at this stage. And from there, it really depends what's happening global economy-wise. I'm not going to do individual stocks today. The only other thing I'm going to point out is this. So this is a massive flush of liquidity. This is across the board in crypto, right? So this is total crypto market cap versus USDT, USDC plus DAI. So basically stablecoin market cap versus total crypto market cap. And that is a massive flush. Like that's back to levels that we were at basically in the bear market. And after the big sideways that we had. So where's that? It's, yeah, April. We haven't seen those levels since April this year, which is when, to be fair, it was looking quite bearish, right? Because this green line here is basically that held up the bull market right from the bottom of the bear market this line has held up the bull market. We did dip below for quite a while here. That was a big flush of liquidity as well before moving back up, but we never hit these highs again. So look, it's not trading like crypto has traded in the past. The leverage that's in the system in general, stocks and crypto. We saw an ETF fund submit filings for up around 50 ETFs for 3x leverage longs on individual stocks on the US market the other day. 50 ETFs on individual stocks, 3x long. There was such a demand for leverage, it was insane. Retail was driving it. Just look at the sentiment index, the smart money, dumb money index on Sentiment Trader. That will tell you the story. So, that's a big flush of liquidity. Typically, when we get these flushes on the daily, it does come back into them. It doesn't have to do it straight away. So, for an example, big flush of liquidity here, moves up. Generally off the highs, it will do it reasonably quickly. So be careful of that. But sometimes it doesn't necessarily come all the way back before it actually moves up again. So I think it's probably better looking at it on the actual Bitcoin chart. So wick to the downside here. That was a big flush there. 6.7% candle. The full move on that candle was 14.8% after an all-time high. Was it all-time high? Yeah, I think it was. Yeah, well, very close anyway. It just kept moving, right? This one here, flush, had a green day, and then just worked its way back down into it, claimed all the long liquidity that was at the bottom of that. We don't really have a lot of long liquidity at the bottom of this. There is a gap down in liquidity if you look at the liquidation heat map. But typically when you're getting massive liquidation flushes, like that there was a pretty decent flush as well. And that's purely liquidation flush because it's just getting the rest of the longs out of the system, 7.3%. And then we just have a bit of chop and then it moves to the upside. I don't know if it's going to do that again. Like this one here, we still haven't revisited that yet. This is a level we could actually hit in the bear market. Wouldn't surprise me. I doubt we're coming back down all the way to this level, this vector candle. We could, but I'd be very surprised if we get back to the lows of the last bear market. Okay. But the point is, on big liquidity flushes, and that one there, what was that? That looks like a really big one. Yeah, 16%, a bit over 16%. The really big ones, they tend to actually move up and leave them behind for a little while. So just a bit of caution needed. Bit of a liquidity flush there before moving back up as well. Back up in this area, same sort of deal. Liquidation, flush, move away. Not necessarily off the highs though. It's sort of, you do have to be careful when you're coming off the highs. Okay. Liquidation flush there, move up and then back down into it. This is a green candle liquidation flush, so it did move straight back into that in a way, but just went sideways as well. That's what you don't want to see. You don't really want to see sideways after this move. You do actually want to see a bit of a V-shaped recovery. Okay. So does it look like we're going to get a V-shaped recovery? It's a potential. Doesn't really look like it at the moment. Looks like we've actually flushed a little bit more too. We didn't really, like, in terms of key levels there, it's recovered a lot of this liquidity that was in here, but the next bunch of liquidity is actually back down at the bottom of this candle. So the target, if we do keep going down, like if this is just a market crash, then 96.5 is going to be a really key level. You would expect some buyers to get active in there. I'd actually expect some buyers to get active around the value area high as well. That's going to be a key level. You can't really tell much about what happened in this candle and the fact that it went past that, because that was just literally forced closures. So anyway, some of these alts were just insane. Like Litecoin lost over, what was that, 50% of its value, high to low, 65% in one candle. These are going to be very interesting levels for the bottom of the bear market. I would kind of expect that to be levels that we revisit if we go into bear market. Trump coin freaking is going up when Bitcoin's coming down. That's nuts. How much did it go down there? 82% drop on Trump coin. Wow. So all those people out there that are saying, you know, Bitcoin's going to be immune to the bear market, everyone's moving into Bitcoin for safety. No, they're moving into Bitcoin for FOMO and the fact that they can get lots of money into their business. They're buying Bitcoin on leverage in these treasuries, a lot of them. It's not necessarily a buy and hold thing. They're literally borrowing more money than they're actually using to buy the Bitcoin. So you got to be really careful. Some of these businesses, I've said for a while that I think when these guys start getting liquidated, and particularly if MicroStrategy gets liquidated, that will probably signal the bottom of the bear market. Okay, there is a definite chance that that happens, because the issue is people run out of money to buy this stuff with. Like, for price to go up, you've got to have money in the system. And if there's a general bear market across the board, risk is off. Bitcoin is still a risk asset. It trades like a risk asset. You've got to be really careful, because if the amount of liquidity that seems to have come out of the market just yesterday does not bode well for a fun bear market. Like, it's just not looking pretty. The fact that Solana got back to 145, holy crap. XRP was nuts, back into 127. It's been trading at nearly $3 lately. Kudos to the guys that had the orders in way down here. Basically, this flush, there was that much leverage in the system that to liquidate everyone, this flush soaked up almost the entire order book on some of these coins, right? Sui, that is insane. Like, whoever bought down here, good on you. That's awesome. You're already up 5 times. That's a 5x gain overnight. You've got to be so careful when there's this much. There was more liquidity in markets globally, more leverage, in markets globally leading up to that event than there has been in the history of markets, as far as we know, including the lead up to the Great Depression. So what a flush, 82%. Whoa. That's nuts. That's way back down into the bottom here. That's insane. So some of these coins could get back down into their bear market, or very close to their bear market lows from the previous cycle. Some of them will die completely. Hyperliquid, good flush on that one. A lot of these look like they're potentially going to get a bit of recovery. There is, like, as I showed you at the start, there is big money that's coming into the charts. So let's just have a look back at this one. Ah, it's flushed again. Yeah, motherfucker. Yeah. So it soaked up that order and it's actually kept going. So someone else came in with another big order. It looks like it wants to actually soak up these long orders. Once it got rid of them, you could actually see the depth, and like there isn't that many orders for shorts coming into the chart, so it will potentially flush further back into this candle today. So that's an interesting one. I honestly thought that was going to be a bounce. I thought they were going to have to start buying back up so they could push further, the market makers, but the algo works the way the algo works, I guess. There's plenty of liquidity coming in at the moment. Decent orders. Like once price hits a level, the orders are actually coming in after that point. So yeah, interesting stuff. Hopefully you guys survived. Unfortunately, I know of a few that didn't, and some really safe trading bots got liquidated. Some survived, but this was an insane event, and it just goes to show you the robustness of the centralized exchanges isn't great in crypto yet. So a lot of people couldn't get out of their positions because of the liquidity glut. Just the lack of long orders in the system to actually hold up price, because that's what it is. It's basically just, if you're long, you're borrowing money. Say you're long, just say you're long here, you're borrowing money there to say, okay, I'll pay you back when price gets up higher. But if price goes too far down, you've actually got to buy before you before you get past your initial value that you put into it, if you're on leverage. Okay, so price can't move more than what you put into your initial trade in terms of the actual terms coming out of my brain, but essentially it's, you've got to buy lower down. It forces you to buy lower down, and if there's no one that's actually selling lower down, then it just slips, and it just keeps slipping. Okay, that's the big issue. Well, actually, sorry, it forces you to sell at those lower levels, so you need the buyers there, and if there isn't enough buy orders in the system, that's when it keeps going down until it can fill those orders. Right? That's why we get these liquidation flushes. So you just got to be really careful when there's lots of liquidation, when there's lots of leverage in the markets. All right. Hopefully that was useful. Yeah. Hopefully everyone survived. This is nuts, these charts. The amount of liquidity that's left is just, it's something I haven't seen. Like that was the biggest liquidation event that I've seen, that I know of in the markets. Like some of these literally like basically went to zero because they just didn't have the long orders in the system to actually fill the liquidations. There is, sorry. Oh, that's the other thing I wanted to look about. So BTC USD longs, it had actually started to pick back up, which generally means that these guys are expecting a pullback. So they didn't sell much at the top here, and they are buying in again. These guys can buy in for a long time. As you can see here, like on these big moves down, they will keep buying. The good news is they are actually buying. So for the time being, we are still likely to get some more moves up, and we could still hit all-time highs. Like the end of this year is going to be wild to see what goes on. The way the markets are, the way the global economy is, the way politics is at the moment, it's going to be wild to actually watch and see what happens. But that to me is a reasonably good sign that it's not necessarily a sign that the drop is over yet, but these guys didn't sell out big time at the top. They are just still dollar cost averaging in on their longs, and they will keep buying as we keep coming down. But yeah, they could easily keep buying down into the 70K mark. They don't really have, these guys don't seem to have liquidations, these BTC USD longs. They seem to be low leverage longs, and they just keep buying in. All right. Hopefully that makes sense and helps you guys out. Hop into the Discord if you want to try and follow my thoughts on the daily, pretty much daily anyway. But yeah, happy trading. To the upside, I'd be surprised if we actually get much past sort of 17.5 to 18K. Just a retest of this top, like this is a top trend line. And it has been respected a couple of times. I actually took a long in here. It was a partial long, so I was actually in a short as well, but I thought we were just going to have a little bounce here and I was going to close my short when I woke up, but holy crap, that was nuts. So yeah, look for these volume nodes. There is another one down here at the low here. So 108, 800 may get a bit of support, low 108. But if we do continue to the downside at the moment, which it looks pretty keen to do so, then this value area high here, probably a sweep of it, but there's a lot of volume through this region, so I would kind of expect that to hold at least in the short term, and that would potentially, like even a little bit of a flush to the downside of it, would pick up the bottom part of this sort of channel that we had forming. That's, oh shit, I didn't even notice that. The bottom of that wick has basically hit that trend line and bounced. That's really interesting. Bit of confluence there too. All right. So that could be a good bottom wherever we get to once we start turning around, probably on the 4 hour. I'm going to be looking for a turn on the 4 hour mainly. And probably a stochastic momentum shift on the 4 hour. It's actually, that's weird. The stochastic momentum on the 4 hour is kind of broken. But yeah, if we get a sort of a turnaround of price action there, it's probably not a bad time to buy once you see that turn, especially if we're starting to turn off this 108, 500 level. All depends on what happens on the stock market and the political shit going on. Normally I'm not a news guy, but when you start to get these sort of events, you got to pay attention to how long the news stuff goes on for. The charts will show you what's happening, but it's really hard to tell what's going to happen here in the short term. Okay, catch you later.